Credit scores and credit cards, it can all feel a little confusing and maybe even intimidating. But here's the thing, credit is just a tool. And when you know how to use it, it can actually work for you, not against you. Welcome to Chime In Money Talk. Today we're tackling some of the internet's most asked credit questions. So by the end of this video, you'll know how credit works, what credit scores really mean, and how to make smart credit choices for your financial future. So let's get into it. How do credit cards work? Credit cards are an interesting thing. So essentially what a credit card is that an issuer will give you a card and a line of credit, and you're essentially borrowing money against that line of credit to spend money today. Now, the whole idea here is that since you are borrowing money from them, you want to pay it back. And when you pay it back on time, you are building trust with that issuer. Credit cards also boost your credit score whenever you make on-time payments, because payment history is one of the factors that go into determining your credit score. So when you are making those on-time payments, those get reported to the credit bureaus and your credit score should go up over time. What credit score do you start with? You generally start with no credit score, and in order to establish a credit score, you need a line of credit where you add payment history to. For example, student loans, you'll start to establish a credit score. I'm trying to think, when I was a teenager, like my dad put me on like a phone bill, like as a second party in order for me to start establishing some payment history so that I would establish a credit score. But if you're starting out cold, you might want to start with a secured credit card because that gets you some payment history. What's a good credit score? I think a good credit score is anything above 700. Now, I do know that the range of credit scores goes from 300 at the low end and all the way up to 850 at the high end. And I think as long as you're in the 650 to 750 range, that's usually generally considered pretty good. So how do you get a credit card? You actually just apply for one. Now, some credit cards have stricter requirements than others in terms of how much credit you already need to have established. And if you don't have any credit established at all, that's not even a problem. You can get what's called a secured credit card. That's where you put up an upfront deposit of $100 or maybe even $200. And then they will issue you what's called a secured credit card that's backed against the $200 deposit that you put in. What's the best credit card? So in terms of the best credit card, I always think that it depends on who you are as a person. There are definitely premium travel credit cards out there with really high annual fees just for having the card. So as an example, an annual fee might be upwards of $400 per year just for owning the card. That's not great for everybody though. So a lot of great credit cards out there are actually $0 annual fee cards. And that's actually what I would recommend for a lot of beginners that are out there. There's a lot of flavors of credit cards out there. There are $0 annual fee cards, high annual fee cards with lots of perks. There are zero balance transfer credit cards. There are low interest credit cards with an intro offer. It just depends on what your spend and what your priorities are in life. If you already pay off your balance in full every month, then a secured rewards or cashback card can be a great choice. That way you're getting perks for spending that you would do anyway. The Chime card is a great option here. Not only does it have unlimited 1.5% cash back on rotating categories when you set up a qualifying direct deposit and become a Chime Plus member, it even unlocks up to a 3.50% APY savings account. And I would say when you are choosing a credit card, you want to look at your own priorities and then figure it out from there. How many credit cards should I have? Well, technically there's no magic number. One card or multiple cards can be fine to build your credit. Other factors like credit utilization can also impact your credit score. Now, since Chime doesn't report utilization on the secured credit card, your score won't be negatively affected even if you use all of the money in your account during the month. Simple as that. How are credit scores calculated? Well, there are 5 different factors that FICO likes to consider. And the first is payment history. So how often you pay your credit card on time and in full. And if you ever pay your credit card, let's say late, that could affect your credit score negatively. The second is amounts owed. So how much of your credit are you actually using? If you're using too much of your credit, you could look a little bit untrustworthy to your lender, which I know sounds a little bit counterintuitive, but lenders like to see that you are responsible with your credit that you were assigned. The third factor is the length of your credit history. So how long you've actually owned a line of credit for. The longer that you've had it open, usually the better. The fourth is credit mix. So what types of credit are you actually engaged in? Do you have just a credit card, or perhaps do you have a mortgage or a car loan as well? Having a good credit mix can actually show that you are responsible with different types of credit. So if you have more of a mix, that's usually a good sign. And the last factor is new credit. If you're opening up too many lines of credit in too short of a time, like less than 2 years, for example, you could actually adversely affect your credit score. Those are the 5 factors that contribute to your credit score. Do credit cards have PINs? In general, yes, they do. You don't use them as often as you would a debit card, but credit cards, you might use a PIN for, let's say, a cash advance at an ATM, or if you're going abroad and spending money on a foreign transaction. Can credit cards be used at ATMs? The answer is yes. If your credit card can be used at an ATM, it's generally in the form of a cash advance, so you'll be able to get cash out for using that credit card. How is credit card interest calculated? Credit card interest is usually calculated only on the balance that you carry over from one statement to another. So as long as you're paying off your balance in full at the end of every month and statement cycle, you will not be charged interest. If you are charged interest, however, please note that it compounds on a daily basis, which means that if you have a balance, you will be charged a daily interest rate on that, and it's going to compound every single day until the next statement cycle. Hey, how do you check your credit score? When it comes to checking your credit score, you can go to your credit card issuer or your bank. They usually have methods for you to check your credit score, or you can go to any of the 3 credit bureaus, which are Experian, Equifax, and TransUnion, and check your credit score that way. Typically, credit score checks are completely free, at least for the first one, every single year. Credit bureaus are required to give you a free credit report every single year, so as long as you're just checking your credit once a year, you can do that way. How do I freeze my credit? In terms of why you would want to freeze your credit, sometimes people just don't want cards being opened in their name and want to prevent identity theft, so that's why they do it. You want to go to each of the 3 credit bureaus, which are Experian, Equifax, and TransUnion, and just simply freeze your credit online. It's really easy to do. It usually just takes a few clicks. Now, please note, if you have frozen your credit, you can't open a new line of credit. So if you ever want to do that, you want to make sure you unfreeze your credit first and then apply for that new line of credit that way. What credit score is needed to buy a car? In general, you can actually buy a car with any credit score as long as the car manufacturer or car dealership is willing to sell it to you. However, with a higher credit score, you will usually qualify for a lower interest rate, which means that over the course of the loan, you'll probably pay a lot less in terms of monthly payments. A good credit score to have when it comes to buying a car is around 650 and higher. That credit score will actually qualify you for usually some of the better rates when it comes to buying a car. What credit score is needed to buy a house? When it comes to what credit score is needed to buy a house, the real estate industry and the housing industry is much more regulated than the auto industry, and typically you'll need a 620 credit score as a minimum in order to qualify for a conventional loan. So credit cards can be powerful tools for building credit if you pay on time, but not all cards are created equal. The Chime card helps you improve your credit scores with everyday purchases and on-time payments, and Chime members can see an increase of up to 71 points. That kind of lift can make a real difference when you're applying for a mortgage, financing a car, or unlocking better loan rates. So credit doesn't have to be this scary, mysterious thing. It's just a tool, and when you understand how it works, you can use it to your advantage. If you liked this video, make sure to check out the rest of our Chime In Money Talk series. We'll be tackling more of the internet's biggest money questions. Thanks for watching, and as always, I will see you in the next one.